Ka-ching! Secrets is here. How should we find the companies that we invest in? I was going to my girlfriend's desk and answered the most important question. 4,431%. Ka-ching! Secrets is here. Have you watched the two first lessons? Let me know in the chat if you have watched the two first lessons that were the two first sessions that we have had in our Invest Yourself to Freedom with a Pie challenge. If you have watched the first two sessions, just drop watched into the comments and or into the chat window. Did you learn something? If you have learned something, just write into the chat window or the comments. Learn. All right, yes, thank you. So, as you know, my name is Bernie. I'm from Ka-ching Secrets, and I'm together with you on that Invest Yourself to Freedom Pie challenge. And let's dive into the topic. Let's dive into the repetition part. And although we are doing our best to bring you to a successful state, we are no financial advisors. We do not provide any advice. We only share our own experience, and our results are untypical. And if we mention any stocks, funds, crypto investment opportunities, whatever it is, then it's just for illustrational and educational purposes only. And if you want to achieve similar results to our results, you have to commit yourself to learn, to stick to the rules, and to hold yourself accountable. Good. Let's dive into the repetition. The repetition within 24 hours raises the retention by 85%. That's why we are bringing up yesterday's 5 pillars of successful, or the last session's 5 pillars of successful investors. So it's important. These are the 5 pillars that every investor needs to become a successful investor. So it's first the strategy. It is the risk management, it is the money management, it is having time and patience, and it is the most important part is psychology and mindset. Let's say it's this way: if the psychology and mindset are not set up right, the other 4 pillars can destroy everything. So even if you have a great strategy, even if you have risk management in place, even if you have a money management in place, even if you basically are patient, if your emotions, if your psychology, if your mind isn't acting accordingly to the rule set, isn't acting accordingly to your risk that you've calculated. So if you're violating your own rules, then it's likely you will lose money. So then we have learned yesterday about the psychological cycle and why people are losing money. Most people, as they are emotionally driven, they are acting emotional in the financial world. So be it in the stocks, be it in the cryptos, wherever it is, people without a plan, they are acting emotional, and that costs money because it's likely they invest at the top and then they sell at the bottom, and we should do it vice versa. So we should buy low at the lowest price, and we should sell high. And so that's totally the other way around. And then you learned yesterday about the price cost average strategy that we are using. So if you have your amount of money declared that you want to invest on a monthly basis, you're investing it on a monthly basis, and you're evaluating, is the price going higher or lower compared to the average price that I have bought the stock for. Sounds a little bit complicated maybe, but we will provide you the tools that you need. I think it's tomorrow, you will get a spreadsheet that makes calculating really easy. You just put in the current price, and then everything will be calculated for you. So, and you're investing each month. By the way, the best days to invest is within the first 5 days of the month. So you're investing on a monthly basis. If it's going lower, you invest more. If it's going higher, you invest less, and you're driving down the average purchase price to a reasonable level. Let's come to the pies and to the baskets. Yesterday I thought about, okay, it's funny calling it an apple pie, because basically we don't use pies to eat, so we don't eat the pies that we're investing in. It's called a pie that we also call it basket. And today I have brought a nice basket with me. So here is a basket, and to illustrate what we are doing here is I have brought a basket, and I just put it here now in front of me. And I also have brought an apple today. So we will put that apple, and this is similar. I will illustrate this as the company apple. And again, that's no advice to buy apple. We will see it afterwards why we don't buy basically apple, but it's nice to illustrate the company. So we have, oh yeah, by the way, the real Apple logo is with a bite in it, I think. So this is the apple, and we put it into the basket. And then we have, I was going to my girlfriend's desk, and I was just taking some L'Oreal, what is it? Filler, collagen filler. I hope I spell it right. So L'Oreal, famous company. We put for cosmetics and how's it called, appliances for the skin and everything. So we put L'Oreal in our basket, and then I was digging after my old Adidas running shoes, and I put them also in my basket. So now I have my basket filled with some companies, with Adidas, with Apple, with L'Oreal. And now it's time to invest the money. So now we are investing money into the basket, and it automatically gets spread over all the companies. And I'm putting this aside. You may ask yourself now, which companies should we invest in? And this is our topic today. It's how should we find the companies that we invest in? And there is a simple way and a way that needs a little bit of work. We are running through both of them. First, the simple way. Simple way is very simple. Companies you are using products of. So if you are at home and you are using products of Apple, you're using products of Microsoft, you are on Facebook maybe, you are using L'Oreal, you are, what else is there, Procter & Gamble. So there are so many companies. Just have an open eye on the products that you're using in your daily life. And there's a reason for you that you're using it. You're convinced of the product maybe, or it's just part of your daily life, or there are several reasons for you. So if you're convinced by a company, you're using the products, that's the first way how to find a company. And then we have the companies that we are finding by research. What does it mean? We are looking up companies on online websites. There are screeners, so-called. I will give you an insight in that in a few seconds. And then we will just look up some companies and find potential investments that are maybe undervalued and that could bring us nice profits. And there is the most important question when it comes to investing for us. So I'm talking about investing, not trading. Trading is short-term, investing is long-term. But when it comes to excuse me, when it comes to investing, we are looking for companies that answer the most important question. And the most important question is, can it go to zero? We don't want to invest in companies that could go to zero, so high risk investments. A new company that just has been launched on the stock market is a high risk investment. We don't know if it may disappear again after a few months or weeks, or if it's just starting on a certain price, and from there it just drops and drops and drops. So what we want to invest in is companies that give us a good relation between the risk that you are taking and the profits that we may get. And for that, it's a good as said before, the companies that you are using the products from are one thing, and the second thing are companies to research. And I have prepared now some websites for you, and we can have a look on them. So first of all, what I am looking at is the so-called S&P 500 first. S&P 500 is, let me show you that. The S&P 500 is a so-called index. So it's also, you can also imagine that like a basket, like our pie that we are developing afterwards. But this is a basket that's much bigger than ours, maybe, and it's collecting some of the most important companies in America. It's collecting it into the basket. It's putting it into the basket, and then it's evaluating the index of that. So, for example, the stocks that you're seeing here, 3M, A.O. Smith, Abbott Laboratories, so they all have a certain stock price. So this is the latest price, this column here, the latest price. And those are in the basket and they have their price. And if the price goes up for all of them, for all on average, so if most of the shares of the stocks within the basket, if their prices are going up, then the index, the S&P 500 index price is going up as well. So the basket price, when you will. So it's the basket has a price which is collecting all the prices from the companies that are within the basket. And so if we're watching now the S&P 500, I have also prepared a chart, so-called chart for you. And a chart means it's showing us the price development over a certain period of time. And as you can see here at the bottom, we are starting here. I mean, it's going much further, but let's start here in the, I'm born at 1979. So let's start at 1979, which is here. And if you just have invested $100 at this particular point, so you're going to 1979 here, and here you are investing 100 euro into the index. That's possible, but this is not topic of today's webinar, today's lesson session. That's absolutely possible. But you invest 100, and if you now take a look on how much money you have made until today, it was 4,431%. So you have made, just by dropping in 100 euro here and keeping it there, you have made 4,431% in profits. So that's a reasonable amount of money. And even if you just have invested here in before the 2008 crash, so here, even if you have invested here, you would have made 209% since then. So 209%, that means out of 100 euro, you have made 200 euro in profits. Really nice for doing nothing. And that's why we want to start to investigate companies that are contained in the S&P 500. And I'm just giving you a short overview in the screener right now. So you go to this website, finviz.com, and go to the screener here. I will drop the URL into this window. And there you go to the screener, go to all. And now we have a lot of choices here. And you're welcome to do a screenshot after we've finished here. I'm just really running through that quickly. You go to the EPS past growth, EPS growth past 5 years. You go here over 5%. Then on the price, we want to buy stocks only that are above $7. Then the EPS should be over 5% here. EPS growth next 5 years over 5%. That's the outlook. Then we have the debt to equity here, which should be under 0.4. You don't have to care about the numbers that we are, just follow the rules, follow the scheme here. Then we take the PEG, the PEG ratio, it's called. It should be below 1, so under 1 or below 1. And then we are looking for institutional ownership over under 90%. And the final thing is we are going to index here and choose S&P 500. And now we have some companies that are included in the S&P 500, and they have a reasonable valuation of the company. So those companies offer us a nice upward potential. Upward potential means profits. And now you just go into a company, Bio-Rad Laboratories, for example, and you just investigate the company. You will take a look on if you like, you can take a look on it deeper. If you like further, you can Google that company and see what they are doing, what they are producing, what their core business is. So take a screenshot of that. We will also provide it as graphics, and then you are just adjusting all the fields here to the fields that I've shown you. And this brings us some companies that are ready to invest. Basically, it needs a little bit more of a research for that, but this is something we will cover in tomorrow's session. So I will dive into a small research as well. And that's it for today, I think. Yes, if you have any questions, just drop us a line to clientcare@kaching.net. Set up your account on Trading 212 if you haven't done right now. We will tomorrow, or in the next session, we will have a short look on Trading 212 first time, and have a look around there. What is where, and how we can deal with the platform. Having said this, I wish you an awesome, beautiful, and great day, or whatever you have. Yeah, by the way, I forgot, homework. Do the research. Openfinviz.com. Do some research on companies that you are potentially would like to invest in, and look up some certain companies that you like, that you really are convinced of, and then bring them up to be ready to invest into them. I wish you an awesome day. See you tomorrow. Ka-ching!